Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income tip. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com. You can find the link to the website in the description below. Interest rates will soon be coming down, but probably not as quickly as most Americans would hope. That's because the US economy is booming, and cutting rates prematurely could reignite inflation. The point is, still decade-high interest rates continue to be a great tailwind for business development companies, or BDCs for short, like PennantPark Investment Corp, traded on New York Stock Exchange under symbol PNNT. And why is that? This is because BDCs provide capital to private firms that need cash to expand their businesses. Because they're private, you can't invest in them on their own. But BDCs, by their very own structure, can. They're created to invest in small and medium-sized privately held businesses. John?
Thanks, Mo. You're right. It's actually how BDCs invest their money that helps juice their ultra-high yield distributions. Most BDCs use floating rates for their debt in their portfolio. And in this interest-sensitive environment, it has helped energize their bottom lines. And because astute BDCs are good at finding excellent companies to invest in, they actually have a really low default rate of just like 1.6%.
For income investors, BDCs legally have to pay out at least 90% of their taxable income to investors as dividends, much like real estate investment trusts or REITs do. And the yield here could be high and attractive, averaging around 9.96%. That's far superior than the average S&P 500 company with yields about 1.47%.
Yeah, and PennantPark, better than the average BDC, it has a yield of 12.35%. Now, more often than not, a dividend yield is so high because the underlying stock is down. That simply isn't the case with PennantPark. It actually hit a new record intraday high of $7.27 on January 30th, 2024. Now, it has given up some of those gains to short-term profit taking, but continues to trade near that level at around, as of this recording, $6.82 per share. Now, this puts PNNT stock up 48% over the last year. Over the same time period, the S&P 500 has rallied a less impressive 34%.
So, John, what can you tell us about PennantPark Investment Corp?
PennantPark Investment is a private equity fund that focuses on companies owned by middle market private equity sponsors with a track record of supporting their portfolio companies. Its core focus is US-based companies where it invests between 10 million to 100 million in companies with 10 million to 50 million of EBITDA. Its debt portfolio consists of 96% variable rate investment and 4% of fixed rate investments. Now, the company's portfolio includes 139 different companies with an average investment size of slightly more than 8 million. Now, some of the industries targeted by PennantPark includes business services, healthcare, financial services, telecommunications, aerospace and defense, and gaming and leisure, and I think insurance.
What did this BDC do in the last quarter?
Quite well, which you'd expect from an alternative bank. For the first quarter of fiscal 2024, which actually ended December 31st, 2023, PennantPark announced revenue, which is investment income, of $34.3 million, which is up from $30 million in the previous quarter. Fiscal first quarter net investment income was up 52% at $15.7 million or 24 cents per share. During the first quarter of fiscal 2024, PennantPark invested $231.1 million in 12 new and 32 existing portfolios. For comparison's sake, in the first quarter of fiscal 2023, it invested $86.2 million in 6 new and 29 existing portfolio companies.
Lastly, it announced a monthly distribution of 7 cents per share.
Yeah, PennantPark's strong earnings stream continues to be robust, allowing it to provide investors with a reliable monthly, not quarterly, but monthly dividend. On March 4th, the company's board declared monthly distribution of 7 cents per share, or 84 cents on an annual basis, for a pretty big yield of 12.35%.
John, thank you so much for your insights. PennantPark Investment Corp continues to be a great BDC, throwing off a lot of cash. And thanks to BDC's loophole, it needs to pass along 90% of its taxable income to investors in form of high yield dividends. Going forward, the company's earnings stream remains robust, which should help it continue to reward buy and hold investors with a frothy monthly dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.